Welcome to the Never Been Promoted podcast and YouTube channel. I'm on a mission to help you cut the time to all the things that are holding you back so you can unleash your entrepreneur. Hey, welcome back. This is Thomas Helfrich from Never Been Promoted. Why? Because I've never been promoted. Doesn't mean I didn't have a good career or haven't had one. It just had this kind of burning entrepreneurial thing inside me, which if you have it inside you, it's there. And if you're at a job right now and you often go, I wish I could do something else, you have it as well. You just got to unleash it. And that's what I'm trying to do here on the channel is help millions of entrepreneurs unleash that entrepreneur by cutting the time. See what I did there? That's a metaphor. I think it's a metaphor. If not, correct me. Cut the tie to all the stuff, honestly, all the shit that's holding you back. The people are just anchors, the excuses, the fears you hold on to. And, even the big one is also sometimes a sense of entitlement. You feel like you deserve something. Here's the deal. You're going to be the one that determines your success or failure. 100%. 100% you. I just want to be clear. I don't care what your situation is. Someone's really crappy for others, maybe in a perfect spot. It's still going to be up to you. And if you want to make it happen, you got to do that. And to do that, sometimes you got to learn from others. And that's what I helped and try to do here with our guests. Our mission, right, is to help a million entrepreneurs get better at entrepreneurship. And specifically, I love the world, but I want the U.S. to get as many as possible. It gives us a competitive advantage. If you can take a moment to, go to youtube.com. And follow the channel, right? Give it a subscribe, a like, ring the notification. We go live often on the channel, and it really helps, drive the mission. And if you're listening to this, or if you like podcasts, it's on Apple, Spotify, all the major ones. Give it a 5-star review. It's really important to the guests and to our mission to get the word out there, to get that kind of simple, social proof, if you want. It really means a lot to me personally as well. But enough shameless plugs. Let's go ahead and bring in our guest here. Roman, how are you? Villard,
that's right. Doing great.
Villard. I did. Well, I want to say Villard, and it's not. It's Villard, but I am generally not great at pronouncing last names.
It's all right. It's European. Everybody gets it wrong. I've gotten Villard, Villiard, VR.
Vineyard. Have you ever gotten Vineyard? People who just really didn't read it.
Yeah, I did that. Or like the Roland, the Ramon.
Ramon. I want to say Ramon. Tell me about your Villard. You're full send financial. So you're your background. And we'll get into here just a bit. We'll do a small icebreaker. I'll have to think about this one now. Okay. Your background, right? Or we're going to talk about is how like AI, automation, data, technology in general is really impacting how it's impacting today, the accounting industry. Mm-hmm. And how it's really not even close to what it should be because of kind of cultural like resistance to change, regulations and stuff like that, because it does threaten a whole industry. We were going to get into that. But my icebreaker to you is if there's one IRS change you can make, and we're going to focus around tax, do you pick flat tax or the same kind of crazy nonsense? I'm leading the witness here. I don't know. What do you pick? Is it better to have everyone pay 20% no deduction? Screw it. You make 20, top line. I don't care if you're in the U.S. operating and you're saying you're based out of Ireland. That's you, Apple. Do you pay the 20% still? What's your take on that?
Oh, gosh. I'm not a tax expert, so I don't speak with authority on this.
Perfect.
And I don't think there's any easy answers just because of the politicized nature of tax. That said, a flat tax is really interesting, but there's always going to be loopholes and challenges to implement something like that. It would take decades, if not longer, generations. God, there's no easy answer. It will always be complicated, unfortunately.
Yeah. Well, I mean, and it wasn't supposed to be an easy answer. The truth is there is no answer to it. But until you get rid of waste, it doesn't matter what you do. Like you can collect as much as you want, but if your fire just gets higher and burns more of it, what's the point? If you collect less and you reduce, but you still don't add any value on the other side, that's the problem. Is not so much how much, it's how much value is being made for it. And I think that's the problem to solve, because if you can drive value, people are okay paying more.
Totally.
If you have more value. I'm okay getting taxed 40% if I like, well, wait, there's no more healthcare cost I have to endure now, and I have a better retirement set up just as an emergency, like bare bones stuff. Well, I might sign up for that, right? If it's anyway. So anyway, this isn't a political show. It isn't at all. But the point being is but things like technology can impact stuff like that. It can impact accounting, which leads to, by the way, one of the greatest memes. Accounting, it counts for little things. So at the end of the year, you can go send the big thing, the tax return in, and for investors. And I love the fact that the IRS knows how much I owe, but yet makes me guess. That blows my freaking mind. Anyway, we'll leave that off. Do you want to do a little small, like, give me the 60 seconds on your company and back up far enough to make it make sense of how and why you started it?
Yeah, sure. So Full Send Finance, I started about 2.5 years ago or so. And I started because I realized there's an issue in the marketplace relative to what services are being provided to companies to be successful and how that service was being provided. And so when you look at the accounting landscape, there's a significant lack of technology and efficiency and workflow and process in order to yield better outcomes for clients. And so I broke out on my own and took a big risk and navigated through a lot of fear to start up a services company to provide clients with outsourced accounting, financial services, and now data analytics. And so we're leaning into that for SMBs in the $1 to $50 million space. And it's been quite a ride so far.
I mean, 1 to 50 million, is there a big difference between those two types of companies?
Oh, absolutely. Absolutely. So the way in which we work with them, it shifts drastically, right? Because a $40, $50 million company is going to have an in-house team, but oftentimes the same problems exist with that team as they do the smaller companies that don't have an internal function. And just by nature of how accountants operate, they're resistant to change. And so there's a lot of opportunity to create efficiency for those larger companies just as much as the small teams.
Yeah. I applaud you for taking the risk. You're so smooth with it. It doesn't sound like it was that big of a risk, but you're just good at presenting it. You're like, yeah, no, I just took a small risk and here we are. Tell me about that shift. Because what I love to do when entrepreneurs hear stories are the hard moments where you're like, hey, I was making, I went to school for this. I was making good money, and I decided to put a couple, dynamite sticks on the side of it and step outside and blow it up and see what I can do with remains. So talk about that shift from where you were and to like, just day one.
Yeah. So I had left my role at my last company in April of 22, and I didn't know what I was going to do next. I interviewed a couple of places. I knew there was opportunity in this space to create something, but that wasn't my first intention, really. I had a 1-year-old at the time, only child, and it was a familial conversation, right? It's like, hey, I had this level of income. It was a conversation with my wife to say, like, what are the parameters around what we feel comfortable with jumping into entrepreneurship, knowing that you can't put definition around it. So what are we comfortable with financially? What are we comfortable with from a time investment perspective? And once we came to the conclusion that it would be a good use of time to start leaning into this, once I got my familial blessing, I dove in head first, and I spent about 2 months working on internal operations and processes before even going to market in a revenue seeking capacity. So
Wow.
it was a wild ride, and thankfully we've got a team now, and it's a lot of ups and downs.
I see you smashed your right ring finger. What happened?
Which one?
I see. Did you hurt your finger there?
This is a function of having children who paint nails.
Oh, I thought you smashed your finger. I was like, oh man, that looked like a doozy that you're not even flinching on. Guys, visually, if you're listening to this, he has a painted nail. I get it. I have 2 daughters and a son, and I've let him do makeup less so than nails because I hate it bugs me to take it off. All right. I also noticed you have a golf club and a surfboard. It looks like behind you.
That's right.
So,
Where are
okay,
they?
before we get into the really meaty part of this entrepreneurship, which are you better at?
Golf. Golf.
What's he?
This is just
I shoot 104. Golf.
It's one of my life passions. I love it. And a big part of what we do is we try to bring our company name Full Send, right? It means you're 100% committed, you're all in. And so we want to bring that to our team and make them feel alive in their personal and professional ambitions. And so we always ask people, like, what's your full send? What makes you come alive? And for me, that's golf. I adore the time I get to spend out there. And yeah, it's great.
I do. I talk about this. I love golf too. And it's funny, I'm 48 now. And as I play golf now, I get to about 12 holes and I'm like, think I'm good. And so I have to really struggle between like a hole 11 and 15 to, go, because I'm still like a 2 handicap. Like, so I'll turn under par and I know it's coming. I'm like, I got to focus or I'm going to go double.
Yeah.
There it goes.
About it, right? The output is a direct result of your input, and it's just you and the ball, and it could be a millimeter difference, and it could create a 30-yard difference in your outcome. And so I just love the discipline that's required to get good at
Right.
it. And there's a lot of similarities to business as well.
Well, exactly. And I brought it up not for fear practice to be like 2 presidential candidates talk about who can hit a golf ball farther. I have point to it is that golf and entrepreneurship follow a same pattern. At least it does for me right now, where you're excited, you're doing great, you make the turn, and all of a sudden your focus drops because it got hard. You got a double, something happened, and I say that in that metaphor because for me, really, like 11 a hole and 12, it's not that I lose interest. I just get a little tired. I'm like, especially if you're waiting on things and I see the same things happen in entrepreneurship where you're like, if you can bear down and in the moment when it counts, focus and execute, by the end of kind of where your next phase is, you're ready to go play another 9, another 12. And you feel happy or you pull through with like, wow, I got through there and actually did it better. And in your own journey, as you said, 2 months of processes before you even figured out a revenue, it sounds like you knew your market enough. You knew that, hey, I'm going to go to market with this. I've been doing this. Like these things are going to be needed for me to be able to sell anything. Talk to me though, through your kind of back 9 turn when you're like lost interest and how you pull through it.
Yeah.
Do you see how I did that? I didn't even say I hit the ball further than you. There's no way I do, or I can tell you're pretty big, but tell me about how you got through that.
Yeah. Tying it into golf, that's great. Similarly, in the early stages, right? If you're learning to play golf, you hit that one shot, it keeps you going because you roped it down the fairway, and you're like, all right, there's something here. And so early on in business, you look for those really small wins that keep you going, keep that momentum really moving forward. And so for me, I still haven't hit that trough of disillusionment or trough of lack of excitement. That said, early on, I was very narrow-minded and like, this is how it should be done. And I think I had blinders on to what was possible outside and didn't test enough of what should I really be spending my time on that would yield the best outcome for the firm. And I think that led to just, kind of grinding through some early days and months of trying to understand how do we put something forward that really impacts our clients in positive ways. So I don't know. I was a little bit narrow-minded, I think, in the beginning.
Well, there's a double edge or even a triple kind of problem with that. Like the handle's also got an edge on it. Is that if you don't stay niched to what the problem is you're serving, then it's not gonna work, or it's gonna be very frustrating or too much to take on. And if you've solved the wrong problem or you're solving it in the wrong way, which is where you're like, no, we got to do it this way because you get bought into your original idea too much, also a problem. And so that's a struggle that every entrepreneur goes through of, am I solving the right problem? And am I doing it in a way that makes sense? And usually like revenue and feedback from customers do that. Is that what you felt, or was it, what was it for you? Was it, I'm married to my idea and that's how it's going to be? Or was it more like, I don't know how far I need to go out of bounds to do it?
Yeah, it's a good question. For me, from a tactical sense, it was more around the pricing and less around the value prop. Because in accounting, there are 2 very distinct value props. One is just compliance, like, hey, you got to do it to get your taxes done. And then the other one is, are you yielding value from your accounting and finance function in order to create better outcomes for your company, decision-making, actionable data, financial reporting for investors? But for me, I was narrowly focused on this one medallion pricing structure. Here's your bronze, your tier, your silver tier, and your gold tier. What I realized is like that it gets really sticky sometimes if you don't parameter scope really well for a services company. And so I just narrowly focused in on this and then just didn't bring the aperture back to understand what are the right needs, what is the right value prop, and how do I align pricing to that for the market that we're going after. So I wish early on I would have tested a bit more on the pricing strategy side to understand where does it really create value and impact both on us as a firm and our growth, and then also our clients.
Yeah. I mean, well, like for example, like, we use, I think, Wave accounting, and they're great. I have a person lined up.
Sure.
I still don't understand why that software cannot contextually understand that we do not have that many out of bounds pieces, why I need a human at all, but I'm glad I have one to kind of resolve it. And I also understand when I'm working with a accounting versus tax, which is there was a reason I brought that up, because people, even myself, didn't separate the two. To me, it's like the CPA doesn't do usually their ledgers and your accounting person classifies and organizes for the purposes of CPA, saying, hey, this is how your amortization is. This is the capitalized expense. This is something that's whatever. You're paying yourself incorrectly for your type of corp. Like that is not an accounting. That is a CPA question right there.
Right.
And I think understanding those two different things are massively important to an entrepreneur just starting, that you need someone to keep track of your books. And you need a different, and I do mean this, a different person to do a CPA piece. And the reason I say that is because it creates a line of separation and accountability that they can look at and go, I don't know why they classified it that way.
Yeah.
And maybe give me your take on that. And we're going to get into where technology plays, but I think just getting some ground rules for people who don't really understand there's a difference between those two, or don't realize that there should be, is an important piece that I think you'll learn the hard way if you ever go through an audit.
Right. Oh, totally. It's a great distinction, right? Because most people don't understand that when you get into accounting, there are generally three routes that you can go. In public accounting, you can go audit or tax. That's where you learn the basic trades of either being a tax compliance individual or financial audit, financial reporting. The other side is going into industry, and you go straight into being an internal accountant somewhere. Now, there are many firms out there that provide accounting services and tax services under the same roof. There are some challenges that are presented there, in that oftentimes, if they're under the same roof, the accountants who are doing your books, who are doing your financial reporting, are doing it through the lens of what makes our tax team's lives much easier, what makes compliance much easier. And that often is in contrast with what you need as a business owner, what you need for your outside parties, your financial reporting. And so we like to segment those things to ensure that we're doing the best on the behalf of our clients to create an outcome and data that they're able to create action on and create growth from. And so that's just very different than a tax strategy that somebody else would be managing.
Well, right, exactly. So when you're like, for example, we're a C Corp, and when you're first starting, technically you can't pay yourself as a contractor if you own most of the shares. So it becomes a liability or loan. But then your CPA is like, listen, you can pay yourself because you need to report your income somehow, and you need to create an expense. It's not what you're supposed to do, but everybody in the world understands that's how it starts.
Yeah.
Now, fast forward, how does your accounting, adjust with that? It's interesting where the technology could play here. And this is where I look at it sometimes like, why isn't there a technology going, hey, have you considered forming an LLC and hiring your LLC for a real thing, marketing or whatever else, and just creating an expense on your corp side to pay yourself through the LLC, which can just be run through your personal tax return.
Right.
Technology, I feel, should just offer that. Like, this could be given your level of income and the projections. W-2 doesn't make sense because you can't sustain. If you guys don't know, you pay yourself $100 cash, you just owe self-employment. Once you go W-2 route, it's like you need $125 to pay yourself $100. And so that doesn't make sense early stages, but there are ways to get it. My point being is, tell me about where technology plays from the strategy standpoint that then goes downstream into accounting, because I don't see that. And I've looked for applications that says, here's a recommendation to make you less tax liable, and here's how your accounting would fall in. Sure. I feel like the tech's there. Am I wrong? Or
yeah, a lot of people are building great tech on the strategic decision making for entrepreneurs and in the accounting realm. That said, the most difficult part of what's being built on the accounting and AI side is just the context, the contextual awareness of what's happening in the business, what the goals are, what the individual's ambitions are. And so we're still not at a place where there's just a tech that says, hey, here's everything you need to do to set yourself up appropriately, because they're oftentimes missing that context. And so we spend more time on the technology piece of how do we create as quality of internal operations and efficiencies and the right financial tech stack in order to scale a business. And that's a very different approach and lens that we look at it through, rather than the tax compliance side of it. And so what we're trying to do is just enable scalability in a tech stack for our clients to be able to grow and scale.
So walk me through that. So what is the old and what is your new? And go with the $1 million. Like, there's a lot of solopreneurs that are $1 million or less.
Yeah.
But $1 million is where you start going, I can't do it myself, for sure. No. You probably way less than that. You shouldn't, but build that into your model, right? Spend a couple $100 a month to get your accounting done. But talk to me about the old and new and where technology in your company plays with that then.
Yeah, sure. So, it depends on where you want to go as a business owner, right? Like if you're building a lifestyle business, you can get by pretty easily by paying a low cost provider, a couple $100 a month to just for compliance purposes to get your bookkeeping done. That could be an individual bookkeeper on an hourly basis, or it could be some of these new technologies that are coming in, like Pilot and Bench and others that have a low cost kind of embedded accounting solution. That said, there's oftentimes a big disparate gap between their tie to your business strategy and where you're looking to go versus what they're actually yielding. So an example of that would be, hey, if you're an omni-channel business and you sell through, online, retail, wholesale, and your revenue is just one line item on your financials that just says revenue and it's not segmented appropriately, you're never going to have the right data to be able to make good decisions off of. And so what we look at is what are the right integrations, the right tools, the right base layer of accounting in order to accomplish that well. So looking at things like QuickBooks is a good start, right? Let's get your foundation set up. Let's get a good chart of accounts in place. And there's some base level reporting in there that works really well, but we often look at the integrations into that, things like Ramp for spend management that really enable you to have more visibility into the actions of your business.
I would love to hear that. So, I used to use something called Mint. I think Credit
Yeah.
Karma, somebody's taken it
Hmm.
over and it has no value now at all. What do you, it doesn't, I mean, and
Yeah.
though our accounting system kind of organizes things, it doesn't give me insight relative to market or hey, you spent, 13% more on URL spend this year. Why? Like, is that what Ramp does, or what technologies would you recommend to say, hey, get insight into how you're spending money so you can identify 4% costs you can remove? That kind of
Yeah.
thing. So
It's interesting.
what's a tech to go use today? And we'll share your affiliate link if you have one. I'll take it.
Yeah, sure. So,
Just actually, what? Drop it in the private chat, and I'll put that out there if you're going to recommend it. All right. So what's a technology for insight that you recommend into
a
your business?
technology for insight. So there's a few tools that you could look at, like Coefficient or Coupler or DataBox that do really well at integrating disparate data sources. So let's say QuickBooks, Stripe, and HubSpot. You've got these
Mhm.
three disparate data sources. You can bring them all into one location and start yielding some really good analytics and data in order to make decisions. Ramp would be a great example of something that's a B2B product that allows you visibility into maintaining a budget. So you can set up budgets by vendor, by individual, by department. And so that when you have a budget in place and you have something that helps you adhere to it in a really good manner, and then also feeds back into the accounting equation, it allows you to just have more comfort in what direction you're going in as a business owner. So those are all certainly on the business side. Personally, I used to use Mint as well. They sunset it, and now I use a tool called Monarch, and I like it a lot for
Yeah.
personal reasons.
Well, we'll do this when we're doing our outros. I'll have you drop a few in the chat. I'll put them in the
Sure.
comments. That way, if people, and just make a small note when you do that, right? To say, hey,
Yeah.
listen, I love, because we use Stripe, right? We use, I
Mhm.
think I said, like, Wave Accounting, and
Yeah.
we use some invoicing from them. Is how do you bring that together? But getting insights of where you're spending money sometimes is difficult because it hits, and it's, to me, it just all goes to a credit card. I pay the credit card off and never look at it again, right?
Right.
And I know sometimes, like, why am I spending $240 a year on this URL? And I'm like,
Mhm.
God damn it, like, I don't need to do that. And then I forget about it, and it hits next year again. I'm like, why did I do it again?
Yeah.
And to look at buckets. So, like, as part of your piece. Now, so for what you guys do, put in processes in place with your customers to say, hey, let's every 30 days look at these buckets, and I want you to go in as, customer, and say, hey, you're spending 6% of your budget on, like I said, let's say URLs. Go
Yeah.
in there. Is that everything you need? And do you take that proactive stance? Like, is there an opportunity for you to reduce that cost by 2% of stuff you really don't need? Because that would free up more
Yeah.
capital to go to advertising, let's say, for growth.
Yeah.
How do you work with your customers, and how does technology play then with that?
Yeah, spot on. So when we look at the annual budgeting process, we're moving into Q4 here soon, and it's one of those things where you need to set it for the next year a couple months in advance so you can plan appropriately. So once you have that budget locked, you want to introduce a cadence in which you're reviewing that. And so to your point, Thomas, if you're overspending on a URL or a specific category that you already have a budget set up for, well, your advisor should be coming in and supporting your initiative in trying to figure out how to change that spend moving forward. I would recommend looking and reviewing at a budget at least on a quarterly basis to say, hey, we need to make an adjustment here for the next quarter or make some adjustments to our spend. Like I mentioned, tools like Ramp allow you to spin up a virtual card that you can attribute to a single vendor. And so you can set a budget just for a single vendor. And if you ever get charged more than that, it'll automatically decline it. So setting up the right rhythms in place to manage spend is a great place to start. But we're absolutely setting up those conversations to make sure that, our capitalized clients, especially who have got a specific runway, they've got investors coming in, that they're managing their capital efficiently on their own behalf and for the investors.
Yeah, I mean, and where we are, we don't even set budgets. I know we spent X to deliver Y, and then everything
Sure.
left over gets held back for experiments, and it just becomes like
Yeah.
let's keep 6 months cash burn at all points, no matter what. It's like, so
Yeah.
you're a small business, your needs are different than a capitalized business, or I'll say different. When you're an entrepreneur or a startup, solopreneur, you're sometimes searching for the business model for your services still. You're still collecting revenue. It's sometimes inconsistent, and that's a frightening place. We're probably in the tail end of what that looks like, right? Is we shift through markets, but I've been through it. I know what it feels like. I know you can't set up W-2s and things like that because you're like, I don't know if I can pay myself 2 months from now. Like sometimes you're like, I don't know, like customers could just leave. But your stuff in the strategy side is you can use some technologies to help start putting some, wrappers around that, because it becomes too expensive to hire sometimes a fractional CFO.
Yeah.
And where you start with companies sometimes is just get these things in place, so when they mature, it's not like a net new idea. And then, so talk to me about that, and then the ROI that you guys provide. So like, can you quantify what you're doing to say, hey, I helped you save X, or I helped your, do some financial engineering to make Y? Like, talk to me how you calculate that ROI with your customer as part of it.
Yeah, it's an interesting question, because ROI from an accounting services standpoint, it can be hard to measure, because one, you alleviate the business owner from having to do it themselves. You ideally create an environment where the financials are consistent, they're comparable, and they're accurate. And that it's more of the cost avoidance in the future rather than like a present day ROI. The present day ROI would come more from the data that's being yielded from the accounting and finance department, saying, hey, your customer acquisition costs are trending a little bit higher. And so we really need to start feeding back into marketing data that we have to say, hey, let's A/B test a little bit more on the marketing spend side so that we can actually lower that customer acquisition cost. Like, that's going to yield an ROI that's very different than just a kind of a base layer compliance oriented bookkeeping service. That's generally how we think about it. But ultimately, you can have all of these technologies and systems in place, but if you don't have the right foundational layer of proper accounting processes and controls and documentation, you're not going to yield any valuable output for yourself.
So what I'm hearing is two kind of types of accounting. There's transactional, as someone just helps you organize it. There's real no insights or thoughts or correlation to other parts of the business. It's just like, get them ready for taxes at the end of the year. And I think that's more of where my accounting currently is. It's like, how does this line up? What expense bucket does this go into? Fine. All right. But the idea of the ROI is, hey, listen, if we use a little technology insight, like technology can look at data, and data can say, here's some insight. And your example of marketing, it might be like, well, our acquisition costs are higher because we're chasing a different customer now, or we've added events, and that's added an extra $50K of spend, which raises the CAC up over the time. And then you, with that insight, go, okay, that makes sense. We've actually misclassified something, because then that should be a different thing. And that kind of communication creates ROI, because it gives you insight of downstream. Did we get a customer from that event? Did we, so the things, when they work together, become more strategical in nature. I think though, where you guys fit in is definitely on a company that's on a growth, less so than one that's plateaued or starting to decline, because would you agree that's probably not the best use of funds at that point to grow, to do accounting? It's perfectly with insight when you're not growing revenue at that point.
Yeah. I mean, you created a good distinction there, right? There's the tactical bookkeeping and the compliance oriented that really is just to file your taxes at the end of the year, and that's perfectly fine,
right?
Yeah, table stakes, right? It's perfectly fine for most businesses as they're kind of growing up. But once you really start to eclipse that million in revenue, you really need to start introducing some strategy there, because oftentimes you're going to have bankers or investors or outside parties that are relying on or need to take a look at the financials. But then also, just as a management company, you need to figure out what's going to continue to fuel you moving forward and have that right data to support it.
Well, and also the insights of, if you have a good year, right, and you have a cash influx, do you pay tax on it twice effectively, because you keep it as retained earnings that you have to pay on, and then pay yourself later? Or you say, listen, you got plenty of reserves, go pay yourself, because mean, otherwise you're spending 25% more on the money for
Right.
no reason.
And right now it's August, 6th right now, and we just sent out a note to a number of clients saying, "Hey, we know that last year you did a lot of manipulating in December for your tax purposes. Let's start thinking about that today. We've got 4 more months. Let's
Right.
not get into a situation where in December we're just scrambling to come up with the right tax strategy. Get that in place today."
Right. Yeah. Listen, I mean, one of our customers pays us a year in advance for our work.
Sure.
And so they hand you a nice big check. And I'm like, at the end of the year, I'm always faced with shit. And so it's like, hey, we're going to move this over, but that's my salary for the next 7 months right there. Like
Yeah.
it's going to decline. So when you see it going down every month, it's just because we're avoiding paying tax twice on it.
Yeah.
So how do we get to a net zero profit on the company?
It-
And
and
that's an accounting question and a CPA question that come together of how to
Totally.
organize it. When should I do it? And stuff like this.
And that's a great point too, because so many early companies, particularly if they're rendering services over over the course of time, if they're able to collect funds up front, that could be a great form of capitalization for the business. However, there's still the longer tail of having to service that contract. And so while you have the cash in hand today, what we would say from an accrual accounting standpoint is that you need to recognize that revenue over the period of the contract so that you're not getting overweighted in your mind of like, oh, well, we've got all this revenue day one, even though it's actually attributed to the next 12 months.
Right.
So it's an interesting accounting distinction there that you make. I mean, it's a tough game, but
What is, and I look at it too of like when you get a check like that, right, as a business and accounting, what I try to do is say, hey, listen, I'm going to cover all my team's salaries at a base. That's like a don't touch. We can burn that down to zero in a year. And if we don't get that customer again next year, then, well, sorry guys, it's what happens, right? It's part of business. If it is, we're good. But at least, you're covered. So everyone's secure. That's the point.
Yeah.
And that's when I work with accountants and do this. Now I want to shift gears a little bit, just conscious of time a little bit too. You talked about culture and how it's being very laggard for a few reasons. One, the CPA world could be significantly ruined, that a whole industry, by the fact that you could probably do 100% sampling. All the data is there. There's really, I mean, AI could be turned on and looked at that, and it pretty much could classify it pretty well, I think, at this point.
Yeah.
Probably better than most is being done because it would be no tomfoolery with it. It's like,
Possibly.
So talk about the culture.
Yeah.
Maybe insert some regulatory things that hold that culture in place, and where you maybe see this kind of accounting. And I'll extend it to tax a little bit because it's related. Where's it going to go in the next year, 5, 10?
Yeah. So we're at a place right now in the accounting space where CPA applicants and accounting graduates have declined every year for about the last decade. And a big part of that is due to what's happening in the public accounting sector and the culture that's been created there, the number of hours, the pay is not where it should be. So now when you look at how technology is influencing our space, the demand still exists and is trying to be fulfilled predominantly by technology, which isn't quite there yet. However, every single industry is not immune to what's happening in AI. You look at development, engineering, you look at any creative space. AI is coming for every job. It's not just accounting. That said, the opportunities that it presents in the accounting space is to level up that base layer of what you had people doing for the last 10, 20 years, leveling them up into more of an advisory capacity to become a little bit more impactful to clients earlier on in their career journey. So as accountants, we really need to be communicating to the next generation, how can you start to leverage this to level up your own career trajectory? And so when I look at the next 1, 3, 5, 10 years, I believe that most accountants will ultimately become more systems administrators, and the tech savviness that's going to be required in order to yield consistent and comparable financials is just going to level up a little bit more. So yes, we may get more efficient in our work. We may be able to have a higher confidence interval in what we're classifying for our clients. But ultimately, we're going to be managing systems. And then the strategy component is actually going to level up even higher because AI is not going to know the inner thoughts and strategies of what people have for their businesses. And so that's where that translation comes into play for those higher level advisors.
Well, I'll actually, I won't argue on that. I'll say a yes, and I believe they will have it. So I think part of your strategies that have been set, if you think how GPT works, a business will start inputting its strategies and agreed upon direction and goals and
Yeah.
all the things and person, like all this stuff will be inputted into like to a business LLM, if you are a business kind of
Yeah.
model. Your accounting that will follow behind that, like, hey, given these strategies and this, these are the budgets. This, I think that stuff actually comes together. And when that kind of
Sure.
singularity comes together, then you still need people to kind of do the checks, and that goes to the compliance side of it. A human's probably going to have to sign off on something, so that means they're going to have to look and touch some stuff. But I think eventually, what happens is the noisy of accounting becomes more of like the software to manage it and make sure it's just, there's an intermediary that's doing some kind of checking, because you don't want the government to do that. And all that stuff comes together because I think technology drives behind it. And then people can focus more on the service to the customer and less so on the hours burnt on, well, what's this expense? What's this expense?
Yeah.
When the expenses are already labeled correctly from the credit card companies that are from the vendors that you bought it from, then when it comes into the systems, technology knows exactly what to go do with it.
Yeah.
And if you've got context, it knows what customer it lined up to. And when, I think that's when it really comes together to be way more powerful and way more insight. And if you're doing it the old way, you're screwed.
And we're still there, right? Like 90+% of accountants aren't using ChatGPT. They're not using AI to support their internal operations. One, because of security and some challenges in data, but on the other side, just because they're not really aware of it and are scared of it. But I think you're right. Like the more that we're able to implement the contextual awareness of what's happening with the client, the better we'll be as advisors. That said, my fear in that is that everybody regresses to the mean. And I say that because everybody's going to be getting very similar responses based on how they prompt and what their strategy is in any given LLM. So I believe the most creative, the most in tune with their clients, accountants, and advisors are, the better outcomes they'll have. Because at the end of the day, you see it in marketing today, right? Look at how a blog is written. It's written by AI, and I think you'll still be able to tell. But the most creative, the most unique players out there in both realms will definitely excel above any capabilities that AI
Yeah, well,
has.
whenever you can break out of the mean to add value or shave off 0.5% of cost or identify a problem or whatever it is, you get an advantage. And I think, that's where the human comes back into play of, awesome, you're hitting it. Have you thought about this? And so I think there's a blend of that singularity of AI and automation and, all that kind of stuff that goes with it. Who like this is kind of the part where I want, who should get a hold of you, why, and how do you want them to do that?
Yeah, so I'd say really any founders or executive teams in that probably 5 to 20 million range of businesses, even like 1 to 5 is a great fit too. But if you're walking through the process of scaling a business and you don't feel like your accounting and finance department is really scaling with you, it's lagging behind, you're not getting the insights and data you need, those are the types of companies we help support take that next step and help level up their back office in order to really get to that next level. Because we've worked with countless businesses in that 20, 30 million range that haven't focused on that. And it has yielded a significant amount of issues once they really start scaling and bring on team members, because they don't know where they're going. They're operating without a map. And it's really challenging to know where you're going without that map.
Yeah, well, it is a founder and a CEO of a company myself. Getting some insight allows you to make better decisions as well. And and when you get away from the tactical and move more strategic, if you're not, in my opinion, if you're just not using technology, you're getting behind. And I'm not saying you should be over the top with it, but it should be an enabler with like some of the text you talk about, which, we'll get into the comments here, because I'm interested in those as well, because I would like to get more insight without having to hire somebody initially. And when I have insights, then a service like yours is, starts making sense. I'm like, hey, I'm doing these insights. I don't know what to make of it because I don't know how to get an advantage from this data. That's where you guys come in and say, hey, this is what this is. Here's your tactical costs or investment, if you will, or cost. That's really a cost. And here's the additional investment you'll make to get this kind of insight back, which should yield this when you're in year 3. And that's where you guys fit. And that's where technology enables what you do, which enables a CEO to make better decisions. So they're in a better spot 2 years from now, 3 years from now, or even a year from now, for that matter.
Totally. And like, we don't have a crystal ball, right? We don't know where the future is for any business. And so our key advantage is, like, we've seen this play over and over and over and over again. And so we can kind of crowdsource our intelligence from working with many other similar businesses to say, hey, I know this is in your plan. You may want to look out for these 2 or 3 things as you march down this path. We may need to slightly tweak that plan in order to yield the outcome you're looking for. And it's a fun exercise every time. I love it.
That's great. If there was one question I should have asked you today and I did not, what would that question have been?
Oh gosh, that's a good question. I would probably say something to the effect of how and why is data becoming the most important element of any new business that's starting off the ground.
Yeah, that is a good. How do you? What's your take on that? Because that is a really good question. Thank you.
Yeah. Yeah, sure. So my take on that is really when you look at the last 100+ years, cash is king. Before that, it was bartering and trading. I believe the next 100 years, you're looking at data. Data is king. So if you're starting a business without a data strategy, not necessarily for data monetization, but for internal efficiency and decision making, you're going to get to the point where the gears are just grinding and you don't have the right connectivity in your databases to understand how to make the appropriate decisions. Because every decision you make has a ripple effect on your business early on. And if you don't know what the ripple effect is because you don't have the right data, it's going to be it's going to feel really hard to move forward. And so I would recommend a data strategy from day one. And you can start really, really small. It doesn't have to be a full data warehouse, but just make sure that you're keeping that in the back of your mind as you're building.
Awesome. Thank you, Roman. I appreciate coming on today. This is like, this as exciting as counting can be, because we all know we can all fall asleep to it. Where I'm excited for it, just with an AI kind of background and automation. I like the idea that accounting can be gone from like a cost center to something that actually could be a strategy and a weapon. And I don't think that's ever really been the case for most small businesses. It's just been some shit you got to do, right? Yeah. And now, like you said, if you have a little data, a little insight, you can leverage those transactions to do better things for the future that you would hire people for, that you would be on the bottom of the list of all the stuff you want to go do. It's not happening until someone goes, hey, I need to raise $1 million or $2 million. And then now I need one. And then, what I mean? So that's when it bubbles up. But when you're saying, man, maybe it can bubble up right away, and it becomes more cost effective for the investment. So that's great. I'll put your stuff. I'm going to put you in the periwinkle room. There's no snacks. I ate them all, and I'll be back with you really quickly. But thank you. Drop the links in the private chat here, and for the stuff, and I'll and maybe make a note of what it does, and I'll put that in the comments, and I'll see you in just a couple minutes. But thank you, Roman, for coming on today. For everyone who made it this far, thank you so much for listening. This is the Never Been Promoted, podcast. We're a YouTube channel. Go to youtube.com and check out the channel, and we're adding more content. We have a whole bunch of new stuff coming out here this fall in 2024 and Q4. Give it a subscribe, give it a notification. We go live often. And if you want to come on the show, you can. Just reach out to me on linkedin.com/n/Thomas Helfrich. Tell me what you don't like about the show, and tell me why you should come on. Until we meet again, I want you to get out there and go unleash your entrepreneur and really start cutting that tie if you can. So to all the stuff that's holding you back. That's what the point of this show is to help you get better at entrepreneurship. And to do that, you're going to have to make some hard decisions. You're going to have to do some things in your life you didn't think you'd ever be able to do, but you can do it. And lots of people are doing with it. So thanks for listening. Thanks for watching, and see you soon.